Hey everyone, welcome back to Corporate Decoder, the place where we dive into the fascinating world of corporate filings. Today we have Albertsons companies and their proxy statement. Proxy statements are a bit like those personality quizzes everyone loves to take. They tell you a lot about the people in charge, what they're getting paid, and what big votes are coming up. It sounds simple, but stay tuned because in the hands of some skilled corporate chefs, even these reports can transform into something that will leave a bad taste in your mouth. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. First things first, this proxy statement is dated June 2025, and it is an invitation to the annual meeting of stockholders that is happening on August 7th of the same year. Susan Morris, the CEO of Albertsons at the time, encourages stockholders in her letter to attend. She highlights the company's ambition to earn customers for life, which sounds like a noble pursuit that the company aims to inspire well-being and connect with customers through digital platforms and loyalty programs. However, she also mentions the need to invest in pricing due to inflationary pressures, which means that everyday products might be costing a bit more than the company is willing to spend. Alright, now let's scroll on to the business that will be conducted during the shareholders meeting and see what kind of interesting news the company is trying to push. What immediately catches your attention is that the company will ask the stockholders to vote in 7 proposals. The first 3 being common proposals, and the following one being based on what some shareholders want to change. The first proposal involves electing 11 people to the board of directors for what seems to be a 1-year term. I will not read each name because it would bore you to sleep, but stick with me. The second proposal is to ratify the appointment of Deloitte & Touche, an accounting firm, as the company's independent accounting firm. This is basically asking shareholders to say, yes, we agree with your choice of accountants. Third proposal is to vote to approve our big executives' compensation. The higher executives usually get paid in the form of a non-binding agreement that most of the times gets waived. And they will also vote on 3 stockholder proposals, which the company is mostly against. Let's take a quick look at these gentlemen and gentlewomen. In a quick scroll to our director nominees, we see Sharon Allen, Frank Bruno, James Donnell, Kim Fennerbresk, Alan Gibson, Lisa Gray, Sarah Menzer, Susan Morris, Alan Schumacher, Brian Kevin Turner, and Mary Elizabeth West. Some of them are independent, which means they don't have any particularly big ties with the company. Most of them bring years of experience in the company's fields. It appears to be a fairly balanced group. However, it is important to note that one of the big owners of the company, Cerberus Capital Management, has a big say in who gets to be on the directors board. Basically, depending on how much stocks you are holding, they can name up to 4 directors of the company. Now let's scroll down a bit to relevant skills, background, and expertise paragraph, where it is stated that the board members bring lots of experience to the company. It mentions corporate governance, financial expertise, food and retail industry, information technology, and a lot more. However, remember that this is the company pushing this data and things aren't always as they seem. Looking at the board governance highlights to get a summary of the overall governance structure. It seems all is very up to code. Most of the members are independent. There are independent standing committees. There is board oversight of key risks and more. It seems that they are doing their best to avoid some usual criticisms. Jumping to comparison of cumulative total return chart, it highlights the high total returns compared to the S&P 500. However, this chart started on June of 2020, right at the company's high peak. It is important to know the complete data before drawing solid conclusions. Now let's get back to why stockholders should vote against the next 3 proposals. Proposal 4 is about food waste reporting. Proposal 5 is about a report on human rights policy, and Proposal 6 is about a report on risks of state policies regarding reproductive health care. All 3 of these, the company is pushing for a vote against. What's exactly happening with this topic? The first proposal requests Albertsons to disclose the quantity of food waste generated and the percentage of that waste diverted from landfills. This is because shareholders aren't able to fully assess Albertsons' progress, and if it is meeting its stated goals of 0 food waste to landfills by 2030, the company is pushing against, arguing that its existing strategies are efficient and prevent food waste. The second of this kind of proposal is for a report on human rights policy and human rights due diligence. The proposal talks about the risk of reputational damage that Albertsons faces if it isn't transparent with high-risk suppliers, and asks Albertsons board to provide a summary of its human rights policy. The company pushes against, arguing that they perform operations in global markets and cannot fully attest and follow the actions of each company. This seems like a reasonable argument. The last of these three proposals is number 6, dealing with the reporting of certain risks in state policies, specifically regarding reproductive health care. The company states that they are not the ones pushing which medical decisions should be taken, rather that the employees and their providers should. Albertsons is essentially stating that creating the report would not only be unproductive but also a waste of company resources. This might be caused from how the subject differs from company to company. Let's see what we've been paying Deloitte and Touche, our trusted accountants. In fiscal year 2024, their audit fees were about $5-7 million, pretty standard. Audit-related services like third-party compliance costs, another $1.3 million. Tax services, helping keep things above board, were $410,000. All in all, the company spent $7.4 million on Deloitte and Touche. Alright, it is time to get into the fun part and look at how much executives are getting paid. Keep in mind, however, that because all the company activities have been slowing down due to their now terminated agreement to merge with Kroger and the federal complaints to prevent it, some numbers might be a little wacky. Looking at Vivek Sankaran, the former CEO, we see his salary for both 2023 and 2029, that not all compensation is paid directly in cash and stocks might change in value. For 2024, Sharon McCollum receives total $7,882.2048. Susan Morris a total of $8,278,076 tests. Thomas Moriarty $6,376. Thomas Moriarty $6,307.19. The rules and guidelines for our executives are in line with typical corporations in the US market. They have stock ownership guidelines, clawback policies to regain compensations in case they mess up, and more. Seems all clear there? Finally, let's check the CEO pay ratio. The company's CEO made about 475 times the median employee's salary. The CEO's pay was roughly $15 million versus the median compensations of $32,000, $50,000, $57. Is this justified? Well, let me know what you think in the comments. Now, looking at Albertsons more broadly, the company is still trying to look for ways to grow their business and customer base. However, the failed merger must have left a significant wound to the company's confidence. In the previous quarter, Albertsons was looking at the possibility of a big jump with Kroger. Their debt levels continue to be a concern, which may raise some questions about Albertsons' valuation. As inflationary pressures grow, customers might be more willed to buy basic products rather than Albertsons' higher ticket counterparts. Alright, that's our breakdown of Albertsons Company's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.